Hello and welcome to Rajya Sabha Television with me, Frank Pereira. The one regulator in India that dominated news in 2016 was the Reserve Bank of India. First, there was controversy about whether or not Raghuram Rajan would receive an extension for his tenure, which ended with Rajan announcing that he would not be seeking another term. Then Rajan's predecessor, D. Subba Rao, came out with a book where he has listed details of his disagreements with the government over various issues and how he had to pay a price for it. The biggest of them all, however, was reserved for the end with Narendra Modi government's note ban decision. Questions about RBI's independence and credibility seem to have become the running refrain. In addition to the public debate on the issue, even RBI's employee union wrote a letter to the governor expressing its concern over infringement on the central bank's autonomy. On this edition of The Big Picture, we'll take a look at how autonomous the RBI is and how autonomous it should be. Joining me on the program today are Renu, Kohli, consultant, Ekriyar. She is also a former staff member, RBI and International Monetary Fund. Also with me on the program today, Arun Kumar, retired professor, Center for Economic Studies, JNU, A.K. Bhattacharya, editorial director, Business Standard, and Ajay Dua, former secretary, Ministry of Commerce and Industry. Thank you so much, my panelists, for being here on the program today. Renu, Kohli, I'd like to start with you, of course. How autonomous really is the RBI today as it stands now?
It's difficult to answer that in binary terms, but let's look at it in three aspects, which is in terms of appointments, the terms of appointments, the top officials of the Reserve Bank and that of the governing board. There has been a dilution which has been talked of, which is the diminishing of the stature of the deputy governor and the governor in the last 1 year. And terms of appointment, typically they used to be 5 years, not typically, but there was a trend towards extending them towards giving the upper branch so as to give more operational flexibility and autonomy. That seems to have seems to be shortening. Terms are now getting to be 3 years. Then if we look at the aspects of the degree of credit directly or indirectly that the central bank can extend to the government, then there has been a trend over the last 10-15 years towards deregulation and increasingly more and more distancing and separation between fiscal and monetary policy, which is another aspect of autonomy. And last of all is in the conduct of policy, which is exchange rate policy, interest rate policy and other functions and working. There too, actually, in the environment of deregulation, we find from 91 onwards, starting with the separation of the fiscal and monetary functions, the signing of agreements of discontinuing the system of ad hoc treasury bills, statutory autonomy in the form of fiscal responsibility and budgetary management, FRBM legislation. So, and most recently coming up till last year, which is inflation targeting and operational framework of monetary policy. There has been a trend towards greater autonomy. At the same time, there is also in some aspects you can see that there is a dilution in autonomy. So, overall, yes, in an environment of deregulation, if the progression should have been towards further and further operational autonomy, there has been a certain dilution.
Okay.
That's where how I would put it.
Okay. Mr. Dua, as far as the RBI is concerned, it's governed by the 1934 RBI Act. That act was amended earlier to bring in the Monetary Policy Committee, of course. Was that done to dilute the autonomy of the RBI?
Difficult to answer that, but I would go by the circumstantial evidence. For quite some time, the federal government, the union government, had been keen to see the Reserve Bank of India lower the general interest rates in the economy. However, many governors, and particularly the predecessor of Mr. Urjit Patel, the present governor, had linked up the policy rates with the prevailing inflation, particularly the WPI inflation as measured by WPI in the economy. Since the inflation wasn't coming down, largely because of food prices, or the primary product prices, he had been not in line, I would say, with what the government probably thought was essential to revive the country's economy. The growth rate has been sagging for a variety of reasons in the last few years. Not doing away entirely with his concern for inflation, the government first agreed with him, entered into an agreement with him on the band, saying if the inflation goes beyond a particular level, comes down, then the then the Reserve Bank would look at reducing the rates. If it goes up, it may not, etc. Towards the end of Mr. Rajan's tenure, it was formalized when the law itself was amended that it will henceforth be a decision not of a committee of advisors which the Reserve Bank had and which it would consult while taking a call, including the Reserve Bank governor having full powers to overrule the entire committee, which is what it seems had been happening for some time, that let this be fixed through a monetary policy committee provided for in the RBI Act itself. And there, though the governor has been given a veto power, the government also formally was able to get its foot into the decision making by having the right to nominate two persons.
Indeed.
So it would appear that not towing the government's line, whether it was a good suggestion or otherwise, the Reserve Bank proceeding, meaning taking the calls on this very important policy measure by itself, did kind of pique the government, and it was decided then to amend the law and henceforth not leave policy rates of the economy entirely to the bank or its management.
Sure, indeed. Mr. Bhattacharya, another thing has happened, of course, post-demonetization. We have seen a joint secretary from the finance ministry, in fact, deputed to the RBI to look after the currency issue. Can't the RBI, look after these matters on itself or by itself?
Let me contextualize this debate in the current legal context. Yes, it's true that demonetization has given rise to this debate afresh, but the debate on RBI's autonomy is not today's debate. It is a debate that has been raging for several decades, actually. I mean, even when Manmohan Singh was the RBI governor, he had a running battle with the then finance minister over whether the BCCI should be given a branch license or not. So the finance ministry or the government and the RBI, as the two institutes, they've always been exchanging views, and very often there have been conflict of opinion and resolutions have come about. But of late, what has happened in the last 1.5 years is this, that you are seeing a kind of a repositioning of the RBI governors and deputy governors. And that started not with demonetization. It started with the appointment processes that were outlined and the manner in which it was a cabinet secretary headed committee that would decide on the appointment of deputy governors, in which the governor would be only be a member. But coming to the larger question of autonomy, let us be very clear that the RBI Act is very clear where RBI is positioned vis-a-vis the government. The Act very clearly says that the government will advise the RBI to act in public interest. So, in other words, the government has the right to advise and direct the RBI to do anything which is in the public interest. And the only condition they put is that after consulting the Reserve Bank of India governor. Now, in the demonetization episode, what we have seen is that the government first talked to the RBI governor and then directed the RBI to go ahead for demonetization, and which was used under 26(2), demonetization happened. So, on paper, you might say that what did the government do wrong? I mean, the government tried to say that I want certain currencies to be demonetized. The RBI governor was consulted. Not his concurrence is not necessary. He was consulted, and then he told the RBI to go ahead and do it. And the RBI started implementing it. Now, there could be debate very legitimate debate over the manner in which RBI has implemented this demonetization, on which autonomy questions will arise. And the point that you mentioned about joint secretary being nominated and all that will come under that category. But my sense is that this autonomy debate is not new. Even when the FSDC was set up, where the Reserve Bank wanted a chairmanship of the number one position in that committee, but it was not granted to RBI. Even in the law, the joint mechanism for resolution of differences between different financial sector regulator, RBI has a position of a vice chairman, the RBI governor. So if you look at the way in which the RBI and RBI's functionaries have been placed in the overall scheme of things, there has been a steady dilution of the powers that the RBI's governors and deputy governors have been enjoying, but they have all been done within the broad framework of the law. So this autonomy debate has to be seen in that context.
Sure.
I think the government is exercising its powers under the law, but the fact of the matter is this: the way it has been exercised, it does dilute the position of RBI in the public eye, public perception, and whether that autonomy is needed or not is a different matter.
Indeed. Yes. Very quick point, and then so that I can get Professor also.
Can I just quickly add to just to add to what A.K. Bhattacharya said? Just that even in law, the creation of a central bank, or the reason or the functions of a central bank, it is the only institution in any economy which is vested with the powers to create money, to determine the price of that money, and because of that, indirectly, the value of the money or the currency, domestic as well as external. So even in law, I would say the central bank is special, and that special status of it, by virtue of its functions and the powers that it has to be, and therefore, because of that, because it's money that are dealing with it, and therefore the integrity of the balance sheet vis-a-vis the government has to be maintained. It is special. It cannot be treated on par with regulators like that of the pension sector or the insurance sector, because they nowhere discharge those kind of functions.
Indeed.
So even by law, I would say it is special.
Indeed, the RBI is indeed special. But Professor, the debate, like Mr. Bhattacharya said, has been going on for a long time.
Correct.
But we've seen that momentum grow off late, because some of the steps that have been taken by the RBI have been criticized by several economists and others, saying that the RBI has not been working independently. Would you agree with that assessment?
No, I would not agree with the idea that RBI can work independently. Basically, monetary policy is a part of fiscal monetary policy, at the macro level. So you have to have coordination between fiscal and monetary policy. You can't have independently the monetary policy and the fiscal policies. That is something that has been talked about in theory, that you can have separate monetary policy and separate fiscal policy, but there are a large number of economists who feel that they have to go hand in hand. So in other words, RBI's consultation with the Ministry of Finance and Ministry of Finance consultation with the RBI is very important in terms of whether it be interest rates, or it be the value of the currency vis-a-vis external sector, or it be other matters that RBI has to be. But I think the special position of RBI, as Renu said, is currency. It issue the currency, the credibility of the currency depends on the RBI, but it also depends on the actions of the government. So again, while primarily the responsibility of the credibility of the currency is the RBI, but also the government has to play an important role in that. Otherwise, it would not work, because it's a fiat currency. So therefore, the government, the state power has to be a part of that. But I'd like to add something more, which is that like for instance, recently the RBI was targeting inflation. Now, if you want to target inflation, that is where the autonomy of RBI comes in. Are our inflation target rates correct? For instance, the WPI does not fully represent inflation. It only has, the primary and the secondary sector, but not the tertiary sector. And that now is 60% of the GDP. So basically, our WPI represents only about 40% of the production in the economy. Similarly, growth rate, there's been a lot of controversy about growth rate. Now, independent and autonomous RBI would have come out with its own statistics on inflation, on growth, and then, because you see, it's very important, because what kind of growth are you getting? If you're not getting a high growth rate, then do you cut interest rates? And to cut interest rates, what kind of inflation are you targeting? That becomes a problem. So growth rates and inflation rates are both very important, but RBI has not come out with its own independent analysis of what this is. Similarly, on the external front, we've got a large outflow through flight of capital. Now, RBI needs to come out with studies on what is happening vis-a-vis Hawala, vis-a-vis the transfer pricing, vis-a-vis all these other things, because that affects the money supply in the economy. What is the flow of currency into the economy? That determines, the release of currency into the economy. So if you don't do those studies, if you don't come out with those, and the monetary equations that are used, the stability properties and the velocity of circulation that is used, all that is getting affected by these parameters. But RBI has not come out with independent studies of that. That is where you see the finance ministry would not necessarily come in the way, and RBI could have done it. So in other words, the autonomy is relative, where RBI feels that these are the kind of studies that the government may not like. So like for instance, the Raghuram Rajan saying, Andho mein Kana Raja, created a huge storm. Why? Because the government was very sensitive to what RBI said. And the markets are very sensitive to what the RBI governor says. And that's why RBI governors don't talk that much. The RBI governors keep quiet most of the time, and they sort of work in the background. So in other words, there's a lot of sensitivity about RBI, its position vis-a-vis the currency, vis-a-vis the foreign exchange markets, etc. And that's why, the autonomy is relative. Autonomy is, behind the doors. What kind of pressures can you apply within the system? It's more to do with that than, with the external positions that can be taken.
Indeed, indeed.
I want to add one point to what Professor Kumar said. Even the inflation targeting, which till recently was outside the domain of legislated framework, is now under the legislative framework of RBI Act. Now is actually the inflation target is defined under the law that the government will direct the Reserve Bank of India that this is going to be the inflation rate target, and as Professor Kumar said, that it will not be the WPI, it will be the consumer price index, which the CSO comes out with in every month. So the autonomy debate has to be seen in what way the government has actually changed the laws by which the RBI has to operate within that framework.
Within that parameter.
Within that parameter. So even the inflation rate has to be gazetted by the government of India, and the RBI will be mandated to ensure that the country follows those parameters of inflation rates, and if it doesn't, it has to, and if there is 4 successive quarters they don't meet that target, the RBI governor is required to come before Parliament and make a submission, an explanation that why it failed to adhere to that target. So I think the autonomy debate has to be seen in the context of the way the laws have been changed, the way the rules have been changed, and today's governors and deputy governors operate in a certain context, whereas the governors in the past and the deputy governors in the past did not operate in that framework.
Indeed, indeed. I want to take the credibility debate a little forward. Mr. Dua, as far as credibility of the RBI is concerned, do you believe that the RBI's credibility has taken a hit of late?
I wouldn't be so definite to say that it's taken a hit, but I would certainly say that there has been an erosion in its autonomy. The erosion brought about by legal changes, erosion brought about by practice of greater consultation requirements within the law itself between the government and the RBI management, and finally by the conduct of the people occupying the high chairs in the Reserve Bank. I would say that in all 3 of them, 1, laws have been changed to make sure that the RBI is more on board with so-called public policy, which the government will convey to it or as the government perceives it. Similarly, in conduct, increasingly more and more matters, RBI is being required to consult the government, or the government sends it, informal missives or formal missives, whatever you might call it. And I have seen over the years much greater kind of engagement with the RBI in the last few years than it was in the past. And finally, I'm finding that governors and the deputy governors there, I'm not separating the two because they're all senior constitute the senior management team, the people who could stand up to the government and be able to provide the necessary confidence to the huge staff of the RBI, probably there has been quite a lot of variance in the degree of confidence or the degree of degree of control which they are able to exercise, and that is what has been reflected in the letter. I happen to have seen the letter which the unions of the Reserve Bank have written to the RBI governor in the context of the deputation of the staff, a deputation of the Joint Secretary to manage the currency, where they have talked of steady erosion of the RBI in the eyes of the public. That is the, I think if there is an answer to the credibility, it comes in there. They have also talked themselves that the credibility of the RBI seems to be fast declining, despite their having done a humongous task of remonetizing the economy in a short while. Whatever we are seeing.
Right.
Having said, given this background, I would say credibility issue which you have raised, Frank, probably has suffered because of the number of regulations which or the number of notifications which the Reserve Bank issued post the demonetization.
All right.
Last count, I think some 50 odd notifications were issued. Some
62.
of them so much in a hurry that they had to be withdrawn or modified.
Indeed. All right. Yes, Professor, you wanted to make a
I
point.
just wanted to make a short point. While RBI has to have relative autonomy within the framework of what government policies are, as Mr. Bhattacharya has correctly pointed out, but within that also there is a certain degree of latitude. So, for instance, on this very important decision on demonetization, now the governor has clarified that actually he was consulted, but he was consulted alone. But the decision has to be that of the board. Now, on the 7th, as per the Rajya Sabha papers that have come out, the governor was asked. He called a meeting on the 8th, and within hours it was done. Now, whether full board was there, whether all the members, the independent board members were there or not, that is also an issue. Why there have been such a lag in appointing independent board members? Because after all, this is a very complicated matter, and therefore, did they get time for consultation? Did they get the full idea of what it needed to be done? Did the RBI get time to prepare for this move? Or was that such a sudden move that they could not prepare and therefore they later on lost credibility? Because after all, when you say that you cannot withdraw your savings, it means that the loss of credibility of banks, loss of credibility of your currency. So in other words, this was a very complicated decision on which the board should have been allowed certain degree of time to make that decision. And then that decision should have gone to the cabinet. But the hurry in which it was done, I think that has led to a certain degree of unease amongst the analysts, amongst the people who are independent analysts, etc., that this way it should not have been done.
Indeed. Let's take the debate forward. Ms. Kohli, as far as central banks around the world are concerned, where does the Indian central bank really stand? Do you believe that some of the best practices followed by some of the other central banks can be adapted and, be followed here?
Well, one is in terms of laws and in terms of progression towards, so-called modern monetary policy frameworks, and the other one is actual operation. And where we go back to, how the degree of autonomy varies from in terms of appointments, that is personnel, financial independence, and that in conduct of policy. So, in terms of laws, statutes, yes, there has been movement, and as I mentioned earlier, in terms of fiscal monetary separation, inflation targeting, and if we go back, FRBM and so on, the discontinuation of ad hoc treasury bills, etc., there has been progression, and in an international context, and particularly in terms of emerging market economies context, yes, one would say that I cannot give exact rankings, but certainly there has been a move towards more modern frameworks. Now, in terms of conduct of policy and in terms of degree of autonomy vis-a-vis appointment of personnel and all, I think I would say India is way behind. Conduct of policy is a lot to do with operational flexibility, the degree of maneuverability that is available to the central bank, to the governor and its top management. And there, I think it's also a matter of perception. It's not just a matter of actually having done that. And if we were just to take the most recent illustration that Mr. Kumar mentioned about what was the board's opinion. Now, one can understand and one concedes that there was a need of secrecy and all, but once that decision has been made, it would have been it would have helped the central bank's cause, and its reputation for autonomy and credibility. It would have helped enormously if it were to be publicly be told or explained in whatever manner they deem fit as to what was the central bank's advice, what was its analysis of the costs and benefits, Remember that in December 7 Monetary Policy Committee review, the central bank, the RBI did come out with, what would be the hit to growth, but then it was just 15 basis points. And okay, even if we accept that, but the basis of that 15 arriving at that estimate was not very clear. So, there is a lot of uncertainty which has arisen because of that, and it's also contributed negatively to the central bank's reputation, and then it goes back to, what has been perceived internationally by the international press, by rating agencies, and so on. So, in these areas where actual operations, operational autonomy is concerned vis-a-vis the rest of the world, India is definitely on the side of emerging market economies. Many of them tend to be inflation targeters. Many of them tend to have made formal moves towards greater independence, central bank independence, etc. But in terms of actual practice, they are way behind the advanced economies, and I would say India is probably in the same boat.
All right, I've got 2 minutes left on the program, so I'd like to get closing comments from all my guests and get the way forward and looking ahead. Mr. Bhattacharya.
Just a quick point on your credibility issue, and I think yes, the credibility of RBI was hit, but in a different area. The RBI's ability to execute a decision of that magnitude probably took a hit, because one would have expected RBI to have handled this entire operation with greater efficiency and certainly greater communication. And I think both in the areas of execution as well as communication, RBI's reputation did take a hit.
Sure.
Number 2, in terms of transparency, in terms of making its operations more open to public scrutiny, I think the last 1 year, particularly the Monetary Policy Committee conduct, has been more and is moving more towards what the more advanced countries follow, where even now you have, after 3 weeks, you actually get to know that what are the Monetary Policy Committee members have actually indicated in while endorsing either a rate cut or a rate increase.
Indeed.
And going forward, I think the Reserve Bank of India probably in situations like today's should talk more and communicate more. Indeed. So that the people have a better assessment.
Professor, a quick closing comment from you.
Yeah, given the relative autonomy and the structure within which the RBI works, the government has to give more freedom to the RBI to act, and the RBI must take that freedom. For instance, inflation targeting in India is going to be difficult because there are a lot of structural problems, like for instance, agriculture, etc. There are supply constraints, and therefore you may not be able to fulfill inflation targeting because of that. So I think that's where the RBI needed more autonomy and more, forthright comment on what it can do and what it can't do. But I think we have got everything confused because, it's assumed that RBI will do this, the Ministry of Finance will do that, but that kind of neat separation doesn't exist. So autonomy has to be relative within that framework.
Sure. And Mr. Dua, close the show for us with your closing comments.
I would say that the RBI and the governor, RBI and the government, now rather than holding too frequent consultations behind the scenes or behind the doors, now that government is going through the legal route as well, confine itself to that. And on the board of the RBI, government is well represented. 2 secretaries to Government of India sit on the board. They have, like any other structure, they are independent, they are there, they can be the conveying the messages of the government, act as independent directors in case they think that the government's role and that of RBI has a greater responsibility of financial stability, etc. And that should suffice.
Sure.
Not pressurization or too frequent consultations on various matters. If the government, the law even provides for, as was mentioned, that if the government finds that on public policy matters, any directive is necessary, any advice is necessary to be given to the government, to the RBI, it can do so, and let it do so explicitly rather than behind the scenes.
All right, I'll have to call it a wrap on that note, because you're completely out of time on the program today. Thank you so much, all my panelists, for joining me on the program and putting things into perspective for us. That's all the time we have. Thank you so much for watching.